Turning to business news now with Giles Beckford, and amid the results today, media companies Sky Television and NZME both reflecting the uncertain times for the industry. That's something we know a lot about, isn't it, Giles?
It is indeed, Sharon. We live it and breathe it every day. From Sky TV's point of view, its profit was down 14%. It's had to fork out more money to get the star content, and that's the rugby, the Olympic Games, the movies, series such as the Game of Thrones. They've also had to sort of cover their back for that basic programming, and the ones that they count as being really important. They can't lose our Disney Channel and Discovery, so that they can at least sustain or try and hold on to their subscriber base. Interesting that the chief executive, John Follett, should say in the commentary that there's never been so much content available for broadcasters, for media companies, and he would have thought, of course, that programming costs would come down. The reality, of course, is that a lot of that is absolute rubbish and you wouldn't pay money. In fact, you'd expect them to pay you money to watch it, but that's just perhaps me being old and bigoted. But more importantly, of course, their subscriber base is being nibbled away by the likes of Netflix and Lightbox, and consequently they're having to pay over the odds for the programs that matter. And also that's why they're looking at their Vodafone merger, which so far has cost them $13 million as they disclosed today.
And Giles, also in the media sector, NZME, or is it NZME?
I think they call themselves NZME. It's just NZME. It's the old Herald and the News Talk ZB radio network, the old APN. It's the New Zealand assets of the Australian APN News and Media. And of course, the headline profit looked pretty good, pretty close to $61 million. But a lot of those, in fact, were the gains from when they split the assets between Australia and New Zealand. The reality is that they're under pressure like everybody else in the media sector. Subscriptions, print advertising, the number of the costs, they're all going up. The costs are going up and they're struggling to hold on to their income. Consequently, you can see why they're busting gut to actually merge with Fairfax. And as we know, that is still before the Commerce Commission, with a decision not likely before the beginning of next year.
The markets, what happened today, Giles?
Well, it had to happen, you would expect, because this is towards the end of the earnings season. We have now only two significant companies to give us their profit numbers. That will be on Monday. That's Chorus, the telecommunications network operator, and Auckland International Airport. We would expect that Auckland International Airport will be smiling all the way to the bank, given the tourism boom, just as we heard with Air New Zealand. Our own top 50 index, though, it fell 36 points. That's about 0.5% to 7391. The New Zealand dollar biding time, 73.1 American cents, 93.8 Australian. The big thing to watch out for overnight is the rather curious gathering of central bankers at the Jackson Hole ski resort in Wyoming. Janet Yellen, who's the head of the Federal Reserve, is due to give a speech there. Everybody hanging out to see whether she gives any detailed hints on the Federal Reserve's interest rate plans, and that will move markets going into the weekend.